In my melting ice cubes video, I told you cash was trash, and I stick by that. It is because it's losing purchasing power every second of every day. But today I'm here to tell you I was partially wrong. Because what if holding cash is actually a genius move in certain situations? But there's a big and very important catch. Warren Buffett, you may have heard of him. He's one of the most famous investors of all time. His investment firm, Berkshire Hathaway, is sitting on a near record amount of cash right now, $347 billion or so. Now, you know he's built his legacy on investing. And why is he hoarding cash if it's no good? He's definitely not lazy, so this must be a deliberate strategy, and it is. What does Warren Buffett and his team know that most investors don't? What if this seemingly trashy asset actually is one of the most powerful tools in his arsenal, and possibly yours? If you're serious about building wealth and you want to understand the game at a deeper level, this video is definitely for you. Today we're clarifying a critical point about cash. You're going to learn the difference between blindly holding cash and strategically wielding it like the pros. By the end of this video, you'll know exactly how to leverage cash to your advantage, and you'll avoid the massive pain of being unprepared for your next great opportunity. If you've had the feeling that your savings are dwindling every year, your purchasing power is evaporating, it's not a feeling, it's actually a mathematical fact. In an inflationary environment like we're in now, where prices are continually increasing, holding cash over a longer term period is actually detrimental to your investment portfolio. In an inflationary environment like the one that we're in now, where the prices of goods and services that we need to survive and live life every day are going up continually, holding cash is financially destructive over the long term. And the key is the long term. Think about it like this. $100 bill that you had in your pocket in 2000, that $100 bill is now effectively worth $50. So over the course of that 25 years, your purchasing power, your cash, has lost about 50% of its purchasing power. Let's take a look at two charts from the Federal Reserve Bank that illustrate the loss of the dollar's purchasing power. The first chart that you see right here is the actual purchasing power of the dollar over time. You can see I have my cursor hovering right about January of 2000, right there. That's about 59 on the index. If you scroll all the way over to today, you'll see that it goes to about 31, which is about 50% reduction from that 59 or 60 number. So this shows from a purchasing power perspective how much value has been lost in our dollars. This second chart is also from the Federal Reserve. This one is measuring the Consumer Price Index. Now, the Consumer Price Index, or the CPI, is a basket of goods and services: food, clothing, shelter, fuel, transportation fares, etc. So it's like a snapshot of how prices have increased over time. Again, I'm going to hover my cursor over about January of 2000 right here. You'll see that this basket, the number is 169. Now we're just going to head on over to today, and we see that the number is about 320. So not exactly double, but about double, around about double. So roughly the prices of goods have doubled from January of 2000 until the recording of this video, which is September of 2025. Two ways to demonstrate the same point, that your cash has lost a considerable amount of purchasing power in a quarter century. This hidden tax on your savings is why cash is trash. And this is a default mentality for most investors, that holding cash is just not what you want to do, because it's a silent killer of wealth. While you're holding the cash, it's deteriorating. And that's why I called it melting ice cubes, because it's slowly melting away and then evaporating. Here's another cool tool so you can play with at home, and you can see for yourself how the value of your dollar is eroded. Now, all of these tools are pulling from different data sets, so they're going to be slightly skewed in terms of the output, but you'll get the general sense they're all telling basically the same story. Now, what you're seeing on your screen is an inflation calculator. And I'm just going to punch in some numbers for this $100 example that we're using. So if in 2000, I purchased something that was $100, then in 2025, it would cost me $187.60. That is a significant increase. So we've established that your money is evaporating. It's melting. But there's a plot twist. What if I told you that with specific and calculated movements, cash and holding cash is a brilliant power move that can set you up for life? Holding cash, or what investors call dry powder, is a fundamental tactic for savvy investors, especially during uncertain times or market downturns. Market downturn meaning like if we're in a depression, the prices of everything is down, and we're going to get to that. So let's go back to Warren Buffett. As I was saying, he's sitting, Berkshire Hathaway, his company is sitting on $347 billion in cash. And lately, he has been selling assets more than he's been buying them. So he's been a net seller of equity, stocks, more than he's been buying. He's been nibbling on certain positions here and there. That's why I say a net seller. Mostly he is selling, and he's hoarding tons of cash. 347 billion is enough to buy every NFL team and have plenty left over, just to give you like a sense of how much money he's sitting on. But why is he doing that? He's waiting for what he calls a rain of gold. And he wants to be able to like put his bucket out there and collect all of that gold. Meaning when the prices of premium assets crash, he wants to take that cash, swoop in, and buy at a discount. And that's how investors think. They look for sales. The same way you might go to your favorite store and you're looking for discounts, or you have your discount card. It's the exact same mentality with investing. Now, the challenging part is when an asset, say NVIDIA, just to pull a stock out of the air, when the price is crashing, the typical mentality is, oh no, it's crashing, let me sell. But a savvy investor, like I say, a Warren Buffett, is because they know the fundamentals of the company and they know that fundamentally it's a good company, they get excited when the price drops because that's when they swoop in and buy. You've probably heard the adage, buy low, sell high. It's really easy to say, but it's hard to do because in that moment, when that asset is dropping in price, our instinctual thought is, oh, it must not be as valuable. But that's not necessarily the case. So it's important to have cash ready when valuable investments, whether they be stock, real estate, a business you want to buy, whatever it may be, when those assets go on sale, you want to be able to pounce quickly and buy them up. Think about your own financial situation. Do you have a war chest ready? Do you have an emergency fund? Not just to pay your bills if things get shaky with your job or your business, but a fund to swoop in and buy assets when they're cheap? Do you have your own personal dry powder fund? If not, don't worry, because we're going to talk about how you can strategically hold cash to put yourself in the position to win when your favorite asset or opportunity presents itself. Now, you might be thinking, okay, I'll put my money in a high yield savings account. And that's definitely along the lines of what we're talking about. High yield savings accounts, money market funds, or even very short-term treasuries. Now, remember, treasuries are basically bonds, and you can get treasuries for very short periods of time, just a couple of months, and they're highly liquid. That's the key to where you want to hold your money. You want to hold it in a vehicle that's going to earn you some interest and that you can extract the money quickly so that when an opportunity arises, you can jump on it. The reason why this is good in the short term is because the consumer price index, the CPI, inflation, even though they'll say inflation is 3 point something roundabout now, 3 point something to 4%, real inflation is about double that. So even if you have your money in a high yield savings account at about 4% or a money market fund at 4 point something percent, even though you're earning money on your deposit, you're still losing money because the price of assets is going up more quickly. So you're still burning cash in that savings account or money market fund, but you're burning it more slowly than if you just put it in a checking account. So the goal isn't to beat inflation, because you're not going to beat inflation putting it in those types of accounts. The goal is for your money to not completely be deteriorating, and also for it to be readily available. So when it's time to make an investment, you can hop on. So to recap, what you want to be doing is the high level investment strategy, which is taking your cash, putting it into an investment vehicle that's low risk and highly liquid. Low risk meaning you fairly reasonably sure that you're not going to lose your money in it, like a savings account that's protected by FDIC insurance, or a short-term treasury, which is backed by the full faith and credit of the United States government. Something like that is super safe, that's also earning you yield, that is liquid. Liquid meaning that you can pull your cash out quickly, so that when an opportunity arises, you can invest in that opportunity. And then even though you were losing a little bit of money because you weren't earning enough interest to keep up with inflation, when that opportunity arises, you'll get so much return that you'll make up for it and some. I'm challenging you today to start your dry powder fund. Whether it's 1%, 5%, 10% of your paycheck, take something before you buy your necessities and put it away for opportunities. This is how you're going to build wealth. Don't just save for a rainy day, save for a golden opportunity. If you're tired of losing money and you want to invest like the pros, make sure you like, share, and subscribe, because I'm going to keep this information coming. Leave me a comment. Let me know what you think. What are your questions? What are your thoughts? What other topics do you want to address? This channel is for you. My objective is to provide information so you can win. So let me know how I can do that, and I'll see you on the next video.